Ladies and gentlemen of the bifurcating world, bifurcated wealth. It's the notion of a separation, not necessarily a fine line. There's plenty of gray shades in between, and historically there was the concept of a middle class, but as that shrinks, everyone is pushed towards the extremes. And it's the extremes of what is wealth? What is wealth? Wealth is the capacity to make a choice because it's not just capital. It's optionality, and that is forced upon us by our geographical place of living. It's forced upon us by the availability of natural resources. Obviously, if you're in a city, you are dependent on infrastructure. That's why when you go to a major metropolitan city, there's homeless that have nothing because you're not going to a forest in Midtown Manhattan to get natural resources or get lumber and build a shelter. So it's getting pushed to extremes. The bifurcation of wealth, those with and those without assets, is one perspective to have because assets are desired. People want to accept them for settlement, and for everyone, it's important to understand settlement of an asset with what? A currency. Because a currency is an intermediary that can facilitate settlement with something else. It's more of an option, has more optionality. You can settle with a currency wherever it's accepted for settlement. Assets are not necessarily accepted for settlement, and they're increasingly scarce as compared to currency units, which is what historically was the draw of equity markets. There's less shares as compared to currency units. Therefore, they should have more value than currency units, and that value varies depending on a variety of considerations. Now, we've been disenchanted with equity markets for the longest of time, so we look to the crypto space to outperform significantly because the composition, the attributes, the structure of these assets and markets are remarkably different. It's a new world to further entrench wealth. I mean, just take even the Bitcoin narrative. It's the few that have the majority, and one of the new headlines is zero point 0.1 BTC is the new Bitcoin, and that's because you can't get a hold of large quantities because it's relatively expensive. If you're 18 years old, you're not coming up with $35,000 to get a Bitcoin. So the same thing happens over and over again. The concept of concentration of wealth. Wealth begets more wealth. With wealth, you can own enterprise, and that enterprise emits value. And that value accumulates, and once you reach a threshold of accumulation, you have more wealth, and you can do things with it. So let's pop over to the main screen, and we'll see what the hell is going on. I see things that are appealing to us. And I get very philosophical, and I love talking about the data and the charts because we're all here to assess how our individual wealth is doing. But I get disappointed sometimes because when we see this, when we see these nice green candles up to 35,000, you got to remember the vast majority of people aren't exposed to this. They're not concentrating their wealth. They're not experiencing appreciation. So I get I get miserable when we have a bull market. I get pretty sad. And maybe that's a curse, or maybe that's a good thing. Reminds me of my humanity. But it's easy to get excited when we are seeing a chart that indicates, oh, something's alive. And there's a lot of interest. Why is there a lot of interest? Because there's not many of the assets, and the ETF narrative is very clear. They're going to need a certain quantity to be able to sell to in the equity markets through major exchanges. So they need inventory, and the inventory doesn't exist. So you have a scarcity of assets. Bam, look at that tick to 35 right on stream. That's a pretty number. Does it push through 35? Holy shit, it's just sitting at 30. Oh, push through 35 a couple of points. That's cool. That's a hell of a number. And the odds are it's going up much higher. So we have our conversations about underperforming, outperforming, and why it's logical to underperform to a degree, and that's really the Bitcoin narrative. The Bitcoin narrative is cool. You own a relatively scarce asset. It's going to be and is currently in demand. In demand is literally expressed in this chart. That's why the price goes up. And it'll underperform enterprise. And because of that, I don't define it as an investment. I define it as FX. Because at some point, merchants will want to accept it for settlement directly bypassing sovereign currencies. And maybe they'll actually accept enterprise shares, tokenized equities for all I know. And they'll be like, all right, I'll take anything. It's kind of like what happens in hyperinflation ridden countries where they'll accept anything for payment other than the sovereign currency. They'll barter. That's trade. And maybe that's the case for our future. I mean, look at the intro image. The imagery for this stream is quite disheartening. It's not uplifting. It'll be uplifting for the minority and quite tragic and sad for the majority. So we don't have to be miserable the entire stream. We can finally feel satisfaction that we see price appreciation for those that may have lost conviction to a degree. But we've been here streaming this for all these years through this bear market of 2022 and 2023. And this is, many on social media would say this is the reward for holding conviction. My brain doesn't operate like that. I would say this was inevitable because it was never a matter of conviction for myself. It's a matter of what makes sense. And that's maybe along the lines of the way Raoul Pal talks. It's obvious, or even the way Luke Gromen talks. There's only a couple of ways for things to proceed. And for things to even continue, the structure of the economy needs to head down a certain path. Now that path can be variable. There can be a variety of different ways things head from A to F. But you're still going to get to F. F isn't changing. F is pretty much set in stone. The long end has to get bid. Fed policy will have to adjust to make sure real rates are either zero or negative, as Luke Gromen talks about, in order to enact financial repression, to contain the consumer price inflationary pressures, to restrict capital being available in the real economy. But for the system to continue, the financial economy cannot be capital restrained. And that's exactly what China's doing right now, and that's probably in good part why we're seeing the price action of markets of late. They're juicing their financial economies to basically paper over the real estate implosion, which is 20+% of their entire economy with regard to productivity. So they got serious issues with regard to the structure of their system. And that's the same thing for us. It takes more time, maybe a little bit more time. We're just not there yet. And that's 2024. 2024. So maybe this, as Raoul says, this is just this market peering through, the next 6, 12, 18 months and seeing maybe a bottom in the Treasury market. TLT still at 83 is right at the bottom. So my expected path is a reversal in 10-year plus in the long end, and adjustment in Fed policy probably like end of Q2, sometime in summer, somewhere around the 6-month mark, plus or minus 2 months in 2024. But that was a popular narrative in 2021. They can't raise rates, and that's not what runs the system. And that's because of the immense fiscal spending that's going on as compared to credit creation. The banks are literally constrained. So if everything that's going on structurally with regard to available currency supply is not driven by private bank credit money printing, bank money, then it's supported, the loftiness, this liquidity is derived from federal sources. BTFP provided a fair amount of liquidity. The HTM portfolios, why? Why does that provide liquidity? Because if they didn't offer the BTFP, banks would have had to unload their declared HTM portfolios. And then, whoa, there would have been a huge sell pressure on the long end of the bond market, on treasuries. And rates would be much, much higher. And, the federal government and its agencies and the central bank understand this. That's exactly why they introduced this concept of a BTFP. But, I posted on Discord and Twitter as best I can, X, references to like Luke Groman's recent talks, and it's fascinating how they talk about like 2013, 2014, and how this sequence of events has played out to get us to where we are with regard to the structure of things. And it all started in '08 with the Great Reset, as Raul talks about, but a lot of the structural changes in the way liquidity is managed was 2013, as Luke talks about, end of 2013, in one of his more recent talks. And that leads us to only a couple of paths that can get us further out into the alphabet, F, G, or whatever, heading into 2H 2024. For things to continue. So F is the system continues, and we don't cascade into a complete deflationary environment, a complete depression, a collapse of the financial economy alongside the real economy, because the financial economy goes, there goes the real economy. The thing about the general public is that they're mostly unaware of this bifurcated economic reality, that there's a financial economy that's completely separate from the real economy. The real economy is goods, services, labor, income, paychecks, and has nothing to do with assets. You make your money from labor. That's the real economy. The financial economy is all this capital related to assets, all this income, all this flow of cash, all this revenue, all these capital gains and income streams that can be derived from the financial economy. And that's really the bifurcation of wealth. Where I had this thought today to title the stream as such. Man, this is bifurcating significantly. If Bitcoin goes 10x from here, Saylor literally has like 40 plus bill, and he's operating one of the wealthiest balance sheets on the planet that's denominated in Bitcoin. So how's that not a concentration of wealth that's not necessarily consistent with a more equal access to wealth? It's not as roses and sunshine as the Bitcoin narrative wants it to be. There is no cure to the concentration of wealth with Bitcoin in any regard. It certainly doesn't fix that. Wealth begets more wealth, and that's independent of the denomination, which is why I talk in terms that I do. Why I use Bitcoin how I do, and how I define it as I see it as a form of cash, and I lump it with FX. So that's cool. Bitcoin could be 35, could be 135, it could be 800, $1.5 million, or whatever the hell it ends up being. It's not an investment. It's either useful for direct settlement, depending on the merchant, if they're interested in that denomination, or it's highly coveted and liquid with a form of currency that a merchant wants to accept for settlement. And how do you do something like that? You need an FX market. So is there going to be FX markets in meat space? That's cool. So maybe another observation is the bifurcation of commerce. So, and that's like the Ethereum narrative. Um, if you're going to have AI and commerce in a digital world, which we don't really know what's coming, what's coming with augmented reality and virtual reality, so on and so forth. And that's not meat space settlement. That needs to be on chain, digital FX. And that's why we're excited about um, these Ethereum exchanges that facilitate FX transactions. Because in meat space, we don't have a capacity to own that enterprise. And now we're back to owning assets. You can't own it in equity markets. You can't start one without significant approvals and regulations and stamps and blood samples and back scratches and probably bribes along the way. But you can provide liquidity in these markets. You can own a piece of these FX enterprises that facilitate liquidity between a denomination and what is the preferred settlement denomination. And that's the significance of these assets. That's the significance of these markets. It's not so simple. And they're not necessarily answers. These are not things that fix some of the most difficult problems, but these are things that are at least iterative on top of antiquated and in many regards deprecated systems. But are they even deprecated? Because if we're talking about a digital economy for digital commerce, there is no history, there is no precedence. So it may not even be deprecating the systems that exist in meat space. They're entrenched, the status quo. And the status quo is rarely disrupted. So the future may not even be what many people think. Like the XRP community is insistent that it disrupts banking and cross-border settlement and central bank digital currencies. And I don't think that's necessarily the path. I think the path is more so bifurcation and further bifurcation. So like you have the real economy and the financial economy, but now you have the meat space economy and the digital economy. And you have meat space enterprise and you have digital enterprise. And I think that's what we see into the future. We'll see what plays out, but I think that makes sense. I think that's reasonable. And whether that's the case or not, these enterprises, these businesses will service someone because there's sure as hell a lot of interest in them. Ethereum's just sitting at 1,800. That's an extraordinary number. A couple years ago, we were buying that stuff at $3 and then $30, and now $1,800, and everyone's like, "Oh, the depreciated price." And Bitcoin is easily hovering in the 35,000 range, and technical structures look great. And all while the real world seems dismal and it seems worse and worse day by day with the geopolitical uncertainty. But that doesn't change anything. The most important thing folks can hear from me is that financial activity and your capacity to manage your capital and structure your portfolio needs to be independent of everything else that's going on in the world. Because if everything gets post-apocalyptic, it's irrelevant. Then all these assets are meaningless. Then what is normal becomes changed, and it becomes irrelevant. So this is the appropriate thing to do, the appropriate way to spend time, the appropriate activity to structure things the way things may be if they play out favorably. That's the path where you actually have a capacity to respond, because you don't have a capacity to respond if everything is all a catastrophe. Can't do anything if a bunch of nukes are flying over your head. You can't do shit. All you're doing is hoping. And I'm not too much of a fan of hope, as I posted on X. So we engage with these markets. I'm not really doing any activity today. Look at me speaking personally, and I hope you folks are sitting back. Most people that view my stream have been here a long time, and I've encouraged folks that there isn't much activity to do. So most of what I do, and I hope we all do, is observe. And we're like, all right, this is great. This is exactly why we structured the portfolio the way we did over the years. This is why we chose the investments that we chose. And this is why we have X amount of cash in varying denominations. They give us optionality to facilitate settlement. Look, settlement is whether you want to go to a grocery store, or you want to purchase Bitcoin, or you want to buy God's Unchained cards, and you need cash to do that. And favorably, that cash is either Ethereum, Bitcoin, or stablecoins. So the structure of the portfolio has nothing to do with the global economic condition. Cash and investments. And I'm pretty sure whether there's geopolitical uncertainty or not, you're still getting up and going to work. So emotions regarding geopolitical uncertainty are probably one of the hardest things to keep under control, and just emotions in general, dealing with family, loved ones, and just life. Emotions can be a burden, whether nothing's going on. Mental health crisis in the U.S. is through the roof. Anyway, I'm all over the place, but these are some good thoughts. These are thoughts, no matter how all over the place I get, I'm sure these are thoughts that everyone thinks about. So what I like to do is bring order to chaos, and I like to find relationships between things. This is like that. That is like this. And that helps me organize things. Then when things are organized, you could understand them. Year ends in the house, cringe and awaken time. This is lots of news, and obviously it's just bifurcation geopolitically. Russia, China, big different stories. Follow Peter Zeihan. He talks about that stuff nicely. I agree. I appreciate all of his geopolitical observations, and economic, not so much. I think I bring some unique perspective to the table, so I don't agree with everyone. I agree with myself with regard to my conclusions about portfolio construction and management. So it's not necessarily what I see when I observe these macroeconomic and demographic thinkers, geopolitical thinkers. So the most important thing is always fold information that you hear into your own story. You have to digest it. You have to make your own grown-up decisions. And you have to walk your own path. And you have to find your convictions. And you have to find a way to be comfortable and suppress frustration and anxiety. And that's the only way to allow time to pass. And time is what does the work. Killis, good morning. Critical Mass here. Brian Morrison, happy afternoon, Cap. Yes, indeed. Dan's in the house. Good afternoon, Paul. With yield-bearing dollars limited to crypto now, how long before the average citizen will demand their dollars or also just tokenized treasury receipts? It's technically feasible. You said a very key phrase there to start a statement. General citizen, general public. We live in a bubble. And everyone lives in their own bubble, whether it's their own neighborhood or their own mind, or how they are financially, or how they view the financial system. It's a bubble. And I think about that a lot, general public. My friend, the general public has no idea about bonds, about yield, about portfolios, about assets, about the financial system. The majority, the matrix, they are blue-pilled. The majority get a job, get a paycheck on Fridays, have an employer-sponsored health insurance program. They pay rent or they pay a mortgage, and they have credit cards, and that's it. In fact, a good part of the population doesn't even have a bank account still, and they get paper checks. You remember that? Paper checks. And they go to a check cashing store where they are extorted to convert the denomination of their value into the desired denomination, which is paper currency units. That is the majority. A good part of the global population doesn't have a bank. A good part that doesn't have a bank account, and that's just what it is. So when we talk about financial instruments and Bitcoin, and that's not the majority, my friends. This is a bubble, and for better or for worse, that will serve us well. But always remember, as we're outperforming and our portfolio is doing well, or we're getting income, not from employment, converting time into money, that is not what everyone else does. In fact, that is what almost nobody does from a global population perspective. And that's just important to consider. Always remember that. Stay humble. M. Nava, regarding DeFi, if you were starting out today with 50K, where would you put your money? My friend, welcome to DeFi and crypto and asset management and capital, and starting to understand what money is and starting to understand the bifurcation of the world. And this was always the case, and it just got exacerbated more recently. And the word is disparity, where the rich get richer and the poor get poorer. It's not that the poor necessarily get poorer, it's just that they don't keep up. They don't keep up with the expansion of the currency system, and they certainly don't keep up with the appreciation of asset prices. So starting out, it's important to start with money. And always remember something that I like to remind people. The vast majority of the planet doesn't get paid for work in dollars. So they buy dollars. So if you buy a currency, let's say you went out and purchased dollars, what's the distinction between purchasing dollars, purchasing Bitcoin, purchasing pounds? It's important to flip the script, because if you're starting out with capital management, you have to understand the notion of volatility. So Bitcoin price up, Bitcoin price down. But the hardest thing that I could try and express with words is to counter the HODL narrative, or one Bitcoin equals one Bitcoin type narrative. Because you buy Bitcoin using dollars, and you have to convert your Bitcoin back to dollars in favorable conditions. Because I've shown people the chart, the dollar appreciated against Bitcoin 300+% in the last 2 years, from top to bottom. And that means that you have to operate Bitcoin, Ethereum, stablecoins, and what else? You may well add other assets to this bucket, but you have to operate it like it's FX. So if you're engaging with Bitcoin and Ethereum, you need to do some due diligence into what FX is, foreign exchange, and the cyclicality of those markets, and the pressures and influences on those markets by governments, by commodities and raw materials, and scarcity of oil, and how scarcity of oil plays on the price of the dollar, and how the price of the dollar strengthens everything else, basically depreciates because of the global debt load and debt servicing requirements. So It's not to be comfortable 1 Bitcoin equals 1 Bitcoin. There's very much a reason to restructure the cash position of the portfolio. Now, I state again, as I've been recently stating, I define Bitcoin, Ethereum, and stablecoins as cash because I could use them for settlement with very little friction. Nowadays, this wasn't the case pre-2020. But under many conditions, you want to adjust your cash position. Different proportionality of stablecoins versus Ethereum versus Bitcoin. And you want to do this slowly. This is my best expression for financial advice as compared to many social media persons and novice people getting involved in markets. They think of trading. Oh, I could buy it and sell it and buy it and sell it. I would very much encourage the contrary. You want to do very few transactions per year. And you want to follow the trends. And to follow the trends, you have to zoom TF the fuck out. So the trends have time horizons, monthly, daily, 4-hour, and I love the 3-month. So this is the dollar. So there's a variety of reasons why this should scream higher, in which case Bitcoin will probably top and it'll fall down. So there's plenty of reasons for Bitcoin to go back, reverse in price action and find a higher low, which means from a cash position, you want some Bitcoin. Just because Bitcoin's depreciating doesn't mean you don't want it. It means maybe you want less of it. And this is what I mean with regard to thinking of it in terms of FX. The reason why you want to hold a depreciating cash instrument is because of counterparty considerations, liquidity availability, and the potential for settlement. So Bitcoin is very significant from an elimination of counterparty risk consideration. Now, obviously, everything is dependent on the portfolio size. So you're talking about a 50K portfolio, which is meaningful. The equation changes for like a Michael Saylor, a couple billion, or the big boys, or anyone with a couple millions of dollars. So I state that as a small digression because it's very important to take that into consideration when you're listening to advice, when you're listening to their opinion and their choices for the actions they take. They're playing their hand. You cannot play their hand. You have to play your hand. You have to respect your portfolio size and adjust accordingly. I cannot put all my capital into Bitcoin. I would underperform and I would not achieve my goals because I define Bitcoin as cash, not as an investment. And Bitcoin is not productive, so it's not owning a company, it's not owning an enterprise, there's no cash flow, which is meaningful. It's not that Bitcoin should produce cash flow or you should rehypothecate it and lend it to earn interest. It's not that you should do that. You should use it to alleviate counterparty risk. And you could always use it, being that it's easily converted to a sovereign currency, a fiat currency, dollars, for instance. So you can make payment using any of the available crypto debit cards. So it's very easy to make payment and walk into stores and consume the primary cash assets, which are Bitcoin, Ethereum, and stablecoins. So that's why they're useful. So the smaller portfolio, the harder the work that needs to be done in order to structure it, to grow into the future. And the greater risk that's needed in order to significantly grow a portfolio. I just encourage anyone with a modest portfolio and modest experience to just structure thinking in terms of cash. And Bitcoin is something meaningful to own. But for instance, if you have 10, 15, 20% of your cash in Bitcoin and it goes to $250,000, that's not even a 10x on the money. And that 10x on the money is if you literally sold it all for dollars. And if you sell it all for dollars, you no longer have Bitcoin. You have dollars. What do you do then? This is why capital management is so hard, because you have to think like chess. You have to think on knock-on effects, causality. You have to think of second, third, fourth order sequences of events. If Bitcoin goes 10x on the money, you don't have $346,000. You have the Bitcoin. To have the dollars, you need to sell it, and then you don't have the Bitcoin. What do you do? So you have to think about these things before taking action. And this is maybe what traders talk about with regard to their entry and exit prices and their limits and stops and protection against, being wrong. That's interesting. I think about that. I don't really take trading bets, but that's besides the point. So overall, it's easy for me to say Nava, Bitcoin, Ethereum, but then you have to also consider your expectations. Is your expectations to turn $50,000 into $5 million? Over what time horizon? And is the expectation that you no longer can have the assets and you just have the cash? And what happens to the gross composition of the global currency supply? So if your Bitcoin turns into $5 million, but it's $1,000 a month for a car lease and $5,000 for rent and $1 million plus for a home, the equation doesn't necessarily compute as many would think. Most people think about now, meaning if I turn Bitcoin from $34,000 into $350,000 now, based on the prices of everything now, that would be appealing. But it's not going to happen now. It's going to take time. And over that period of time, everything else is changing around you. So that means it's not as simple as most people think. So that's why I completely give up on thinking of Bitcoin as an investment. If Bitcoin goes to $350,000, I spend it. I pay off a bill. I pay off cars. I own a property. I buy a property, and then I live in that property, and stuff like that. And then I have other income, and I denominate it accordingly. The income is cash, dollar stable coins, Ethereum, and Bitcoin, and then I balance the FX part of the portfolio accordingly. So maybe that doesn't answer your question entirely. What regarding DeFi you say? Which pools would be interested in? Or would we start with Curve? My expectation for Curve is not what everyone is thinking. I'm satisfied if it goes half to all-time high, if it goes 5x on the money. I think that that's reasonable. And I very much understate my expectations. I underestimate. And I don't want to be disappointed. I want to be wowed and holy shit. So I don't expect 10x's on a lot of things. And if they come, great. And then I could take different actions and pay different bills and do things accordingly. But I do expect a couple of interesting things. I expect liquidity in the space to go up. But what does that mean? What does that mean if you took 50 chip and put it into Curve and you get in 10, 15, 20% on your money? 10, 15, 20% over the next into the 2030s. Let's say we topped out at like 5.5%. And we cycle back down to 2.5%, so you're making 10, 15, 20% in a 2.5% risk-free environment. Well, you're outperforming. You're doing well. By all measure. By all meat space measure, 10, 15, 20% in a 2.5% environment, you're doing extremely well. But 10, 15, 20% of 50 grand, you're talking about 5, 10 grand a year. Now, does that meet expectations? If that doesn't meet expectations, that may be reasonable to invalidate it as a course of action. It's imperative to understand your expectations because you don't want to be disappointed. And it may be the case that just invalidating an investment idea is disappointing unto itself. And that is the most important thing to learn with capital management. There are plenty of investments that I cannot do. I don't have enough capital. I want to just own Bitcoin. I'm not Michael Saylor and I don't have an extra $20 million or $1 billion. I don't operate like that. I don't make $20 million a year from work. It's just not. I'm not part of that way of engaging with markets. I cannot engage like that. That's not my hand. I can only play my hand. And probably a great way to beat this feeling or that experience, that sentiment, is to look at other people's portfolios on like a D-Bank or something. And you look at the folks with 100 million or half a billion or a couple billion. You look at Justin Sun's portfolio, and that's their hand. When you're playing poker, you're not playing. Well, I guess you are playing someone else's hand. Maybe poker's a bad analogy. But cards in general, you're playing your hand. Some would say you're playing against yourself. So that's one of the most important things to learn about capital management. It's a game against yourself, and primarily a game against your own emotions, and a game dealing with your emotions and how they relate to time and the passage of time. Pools, I'm not interested in LPs. I don't have enough capital to do LPing. Listen, you got an extra $10 million and you get thrown into curve LPs and you're making 10, 15, 20% of your money on stablecoins, 5%, 5, 10%. Shit, if you got $10 million and you throw it into SFRAX and you get 5% on your money, that's pretty cool income. And if the rates cycle from 5.5 down to 2.5 over the next couple of years, you're making 5% in a 2.5% risk-free environment. You're outperforming. You're making significant cash. You're not going to outperform necessarily asset price appreciation. So another important thing to learn: stop trying to make as much money as you possibly can. I think that leads people down the wrong path. What you want to do is respect the portfolio. You want to respect your investment due diligence. You want to inspect your capacity to find something that's meaningful in a sea that the general public sees as degenerate and gambling and speculation. And that's kind of a story that I've been telling for many years at this point. You folks that have been around for years, I've always said, peering through the madness. I've always seen business and enterprise, and obviously nowadays that story has become crystal clear. And we talk about cash flow and immutability and determinism as being favorable enterprise characteristics as compared to anything in traditional finance, meat space. These are the perfect businesses, getting humans out of the equation. So a lot of what I said is rules of the road, words of wisdom. And in the end, we all have to play our hand and make our decisions. And they're not easy decisions. So I certainly sympathize with everyone. I sympathize with myself having to make these decisions. But I've come to a good point, a point of peace and comfort with the choices I've made. And they're good. I mean, look, Bitcoin's going up. Bitcoin does what I expect it to do, my expectations by next year, which are prudent. Prudent meaning I'm expecting when Bitcoin goes 2x, 3x, 4x on the money, I can meet my expectations. I have 2 bills that I'd like to pay. I'd like to pay off my cars. I finance them. I'd like to pay them off sometime in December of next year. And I have a home modification I'm making this year, which will be due end of next year as well. And that I already have the capital for, but I'd like to pay that off with some extra capital on top. And the Bitcoin and Ethereum that I have will do that. I'm not looking to turn 20, 30, 40 grand of Bitcoin and Ethereum into $20 million. I'm looking to turn 30 grand of Ethereum into 300. Oh. I mean, it's not totally unreasonable. People are talking about $20,000 Ethereum, and I don't want it. I'm happy with 5x. 5x would be crazy to see, and then we got income from our enterprise. Hope that helps. Kind of mind-blowing, as oblivious as they, general global public, are of this space. Some of us are oblivious to the very point you just made. I'm oblivious. That's the most important thing that everyone needs to accept. All I'm doing right now is trying to put words on ideas in my mind, and I'm doing the best I can. I've been doing this for quite some time. It doesn't mean I'm perfect at it. It doesn't even mean I'm good at it. Is very subjective. There's plenty of people that don't like my content. So, the most important thing is to really humble yourself and realize our ideas are just the best we could possibly have. And they're not necessarily good because good is a subjective concept and good is different for everyone. But there are some things that, from a reductionist perspective, you could say are pretty solid ideas, good ideas, like the concept of disparity, the concept of asset ownership, and people that don't have anything and they don't know any better. And that's why The Matrix was a good story, because it expressed really good ideas about being blue-pilled and just accepting the programming. And then when you start to question the programming, that's the concept of the red pill. And you're like, oh, this is why the financial system works the way it does. This is why the concept of liquidity and how the governments juice liquidity and why they're juicing liquidity and how the debt construct works and how the Eurodollar system works. And this is all red pill shit. But look, even in the Matrix, they talked about a lot of people are not ready to accept that kind of information. And they're like, I just want my juicy steak and give me the fucking blue pill. Because they just want it to be easy and not difficult and not frustrating and not overwhelming that it's hard to understand. And I could certainly appreciate that. Do you sympathize with that? You got it to some degree. But you got to appreciate it because that's a good portion of humans. And every human deserves the equal opportunity. It's just the bottom line. Sir Joe present. Poop man. Listen, poop man. Thoughts on Solana? Yeah, plenty of thoughts on Solana. I think Solana is a bigger deal than most people give it credit for. It has incredible throughput, and it's come a long way. It's continued to iterate the entire bear market. And my sentiment is I don't have enough capital to diversify the cash position into Solana. It's already up big numbers, and I don't need to. That's a very important thing to say to yourselves. I don't need to. You don't need to diversify. You don't need to own everything. You don't need to drive yourself nuts. What you want is to expose yourself to things. For instance, if you own Ethereum, you're exposed to all of DeFi. If a central bank adopts, an AMM, an exchange, okay, Ethereum's going to do great. So you're exposed to everything. You own Ethereum, you're exposed to Curve. You're literally exposed to Solana as well if you own Ethereum. You're exposed to the narrative. So do you need that additional exposure? So I would have liked to have a Solana position. I just don't have the capital and I can't justify that degree of diversification. I don't need it, but I like it. And I just invalidate it as a choice for me to make, and that's it. And I put it to rest. And I move on. So I have exposure to, DeFi on Solana vis-a-vis Hero Network. That's a bit of a federation as a concept we've talked about a lot over the last couple of years. And I like owning federations because they're base layer. And look, that's red pill shit right there, right? Federation. The concept is a heck of a concept to try and sling at the general public. How do you even start that conversation? Currency issuers, currency consumers, recyclers, and sterilizers. It's a lot. And I could appreciate that. So all I can do is just tell the story. And as folks ask questions, keep asking questions. I tell that to my daughters, young daughters under 10, all the time. Don't get frustrated when you don't understand something. Ask a question. The only bad question is a question not answered, not asked. Ask the questions. It's the only way to move forward. And the most important person to ask questions to is yourself. Maybe a good part of why I've found myself in this position with the way I think is because of young kids. It makes me think about these very simple things of humanity and the way our minds work with regard to questioning things. And question everything. There's no reason not to. High opinion of Solana and the ecosystem. So how do you get exposure to it? For me, it's through Hero. Oh, yeah. Look, Hero. Hero swag. Hilda's in the house. Hey, Cap. I am called the captain of rationality. I've encountered a couple of people over the years that are just truly brilliant. I could literally count like 3 people that are just truly brilliant. But the scary thing for me is, man, there's some brilliant people out there. I'm humbled every time I encounter someone that I'm like, holy shit, I can't keep up with you. Important to find that humbled feeling. James in the house, rocking the Hero shirt today. Phlegmatic token launch yesterday. Go Hero. Listen, look at the network that's built on top of Hero. Hero being the base layer, the liquidity financier, where the capital flows through Hero, and the revenues in USDC. I mean, that is a more appealing enterprise play as compared to anything I could possibly find on the equities markets, on the stock exchange, on the New York Stock Exchange, and the NASDAQ. Why? Because there's no people. It's just software and contracts and determinism and execution, and you click a button and you collect income. I get myself all all amped up over that shit because there's a concept called manifestation. Act the way you want to act to be the person you want to be and stuff like that. Or if you believe you could start a business, you got to believe it before you start the business. And all I want to do is own a bunch of digital, immutable, deterministic businesses that are aligned with the global liquidity condition. Because as the liquidity cycle unfolds, there will be capital for growth and expansion and venture capital and investment. Investment will drive prices, and venture capital will drive 50 protocols building on top of Hero, 100 protocols building on top of Curve, same amount of protocols building on top of Aura and Balancer. And that's it. Then you own it. And it just pays you cash on a weekly basis. I just want to be a dividend investor. I just want to be an old dividend investor. Poop man. I appreciate you too. That's why you are so patient. The kids. It's an interesting one. It's because so many folks, the tragedy and the horrible things we hear about children, you have to open yourself and free your mind. Free your mind so you could jump from a fucking building top to another building top and neo the shit out of the whole human experience. Free your mind. You got to look at things from a different perspective. So imagine looking at the world from a child's perspective. So imagine looking at the world from a general public perspective of a person that works 9 to 5, collects a paycheck, and can barely make ends meet at the end of the week. How the hell could they invest? And how the hell could they start the process of learning about shit like a federation and the way government debt works and the geopolitical insanity of things? It's overwhelming. And I'd want to be blue-pilled myself if I was in that position. So maybe this perspective that I offer you guys is not a blessing. Maybe it's a curse, because it's a bit of a burden to understand the world as we do, and it's also humbling to know that the degree in which we understand the world is quite limited. There's a lot of folks that are far more sophisticated than myself, far more capable and experienced and knowledgeable than myself. Been a heck of a ride with you guys. October 25th of 2023. We're going to have a lot of fun in 2024 with regard to the financial economy. And I have I have hope for the real economy. I hope it's okay. Um, Last question. We'll wrap it up for today. Hey, Cap, if two fund portfolios are doomed, what other lazy strategy would you consider? You see, that's a simple approach, and that's okay. I mean, listen, just manage cash, which is think in terms of dollars. And what's the best expression of dollars? That's an interesting conversation unto itself because there's a plethora of stable coins and they all have different characteristics, particularly are they bank liabilities and what kind of counterparty risk is involved? Are they pure synthetic currency units, CDP type stable coins, and what kind of counterparty risk is involved, or potential volatility or instability or narrative invalidation? So obviously the big ones, Tether USDC, Frax, CRV USD, probably even MIM at this point. I mean, those boys have done well. They literally survived significant volatility, and they're still here. And that's what Morpheus says. We're still here. That's important to still be here. It's meaningful. So, I like USDC because that's accepted by the debit card providers directly. But what's the difference if you denominate that portion of your cash position in USDC versus CRVUSD? If CRVUSD is highly liquid with USDC, you could literally transfer. You go on any of the AMMs and you could set the output destination address. So you convert your CRVUSD to USDC and you directly send it to your debit card. And there you go. You could spend money and settle a transaction in meat space. And then the lazy approach is Bitcoin and Ethereum, but you want to make sure your expectations are not exceeded. So what are decent expectations for Bitcoin and Ethereum? 2x? If you double your money, because in traditional finance, if you double your money, that's absolutely insane. And to double your money, that also means you no longer have Bitcoin and Ethereum because you have to liquidate it into dollar liabilities for what it's worth. So if you just always remember that when you own an asset that is liquid and the whole purpose of owning it is to sell it at some point, to convert it to another denomination, that means you don't have it anymore. So that's a good part of how I got to my philosophy. If you don't have it anymore, what do you do? What's next? So that's why I like the locking concept. And I'm fortunate enough to have decent expectations and a decent amount of capital such that the locking concept I defined as a purchase. So I don't give a shit about the price point of the asset. I care about X, Y, and Z. How much does it cost? How much does it pay me? And how likely is it to continue to pay me into the future? X, Y, Z. So 50 grand curve paying 10, 20% in 5 years' time. The curve goes 5x on the money. It's $250,000 paying 10%. It's paying 25 grand a year. It's a couple of simple equations. Maybe that's the happy path. Maybe that's too optimistic. Maybe it's prudent. I don't know. But that would be interesting. That's a decent outcome. Now, bear in mind, 50 grand goes 5x on the money to 250 grand. You don't have access to that 250 grand. You don't have 250 grand. You can't sell it. It's not a position. It's a purchase. So what you did was buy 25 grand a year in income. If it's 10% return still, which is probably prudent. I would hope it's prudent. Good shot at that it's prudent. So 25 grand a year in income, that's a pretty damn good side gig, a side hustle. So that's interesting. So maybe that is a consideration. But it's imperative before you do any of this shit that you think about path and what are the possible outcomes and all these considerations before you take an action. Because the worst thing that any of us could do is become disappointed with the choices we have made. Charts, anything to look at. I haven't looked at curve in a bit. That's cool. 47 cents. Convex is up at 280. If folks recall, when I snagged that position, that was about 280. So it went down as Olympus was selling it down to 240 and change. It's been up at 320. It's about 280. All right, great. So all this time, it's volatile as shit. It's been producing bi-weekly income, which has been okay. A little disappointing, but it's okay. Curve looks nice at 47 cents. That's quite nice to see it up a couple of pennies. And Bitcoin looks ridiculous, 34,500 above the 3-month time weighted average price. So Bitcoin is in a much more favorable position technically as compared to Ethereum. It has already pushed above the 3-month TWAP, whereas Ethereum is still below the 3-month TWAP, as you could easily see it here. It's the green and red line. I've talked about this 3-month TWAP a bunch. It's quite a meaningful trend line. Ethereum, you're not going to get a good 6-month TWAP, but look at the extension, the deviation below in 18, 19, 20. And it was a different world. So it's very meaningful when you go look at a chart and see the different worlds that existed. It was a different world, this part of the chart. This was a different, the world was different pre-COVID. This was a different world. And then now it's completely different. And look at the deviation below. Significantly less deviation below the 3-month TWAP. And on average, a great way to peer through the insanity is to turn off the noise. And you could even turn off the SMA. So this is the Ethereum price. And this is the Bitcoin price. Bitcoin has more data, so you go out to the 6-month. So on average, if you buy below the 6-month time-weighted average price of Bitcoin, 6 months later, it's going to be more valuable, dollar denominated. Did I lose connection? No, I still got connection. So that's what's meaningful about looking at these time-weighted average prices. So we're above it right now. We're at 25. So rule of thumb, 6-month is hard to go by because you'll never really get a price. Bitcoin has never gone below its 6-month time-weighted average price in recent history. But if you go to the 3-month, you could get corrections below the 3-month time-weighted average price. So on average, if you buy Bitcoin below the 3-month time-weighted average price, it will be higher in 3 months' time, on average. And that's where we are. We pushed above it. It's quite comforting to see from a structural perspective. So I expect the same with Ethereum. My alpha meter is, I weight my cash position, Ethereum heavy, Bitcoin medium, and cash light. And based on my time preference, which is probably about a year and a half, so about 18 months, 12 to 18 months, considering the way I plan for instance, right now for fiscal 24. So I hope that helps. Thank you all. 18 people made it to the end of the stream. 16 people hit that thumbs up button. Smack it, please. Press the thumbs up button. That was a pretty good stream. We've been doing this stuff for a couple of years now. Oh my, we'll keep doing it into the bull market whenever it comes, because it's going to come. The liquidity cycle is going to come. Wednesday, October 25th at 1:09 p.m. Tell everybody to subscribe. In the description is a link to the most rational community in the entire crypto space. I appreciate everyone that joined me today and everyone that sticks around on Discord, and I will see you guys and gals later this week.